Hey, what's up everyone? Back with another update on Bitcoin's price action. Everything is so far going pretty accordingly to the plan since our last update. Just a quick reminder, if you haven't already, I would highly appreciate it if you took the time to support the channel by giving a thumbs up and subscribe to the channel, as it does help me pump out these videos. So we were discussing the possibility of seeing Bitcoin continuing to the upside with more buy pressure, which we got. We're now at a very good spot for a possible wave 3 conclusion, give or take. We have a few variations on the micro time frames on how we can adjust the count, meaning that we are pretty much resorted down to the Fibonacci analysis more than anything else. Now, using our Fibonacci extension tool, we took the pivot of our wave 2 in white to measure the potential wave 3 target. And all things considered, we have hit a very important zone for this wave 3, and then eventually a wave 4 to 5 to come is going to possibly conclude our very first wave of the larger degree, or the larger impulse wave to the upside, as the intermediate wave 1, 2, 3, 4, 5 to complete our primary wave 5 in the yellow of the larger macro structure. Now, I've given my educational approach on how you can utilize the idea of wave hierarchy. In fact, I totally forgot to share to you guys that I do have an article just based on this alone. So if you are interested, I did also have this put up on TradingView. I have the link in the description below on the significance, or even more so, the insignificance of wave degrees. Of course, you can always just refer back to the Elliott Wave principle. Now, the 1.618 Fibonacci level is the usual or typical target for a wave 3 to conclude. We didn't hit it on the dot, but we did get above the 100% level, which is the important thing. Breaking above the 100% zone does reduce the probability of having this as a corrective structure as an ABC, since these actionary waves do work in hybrid. That gives us the probability of having this as a little bit of more confident impulsive structure than a corrective structure, and that means that we are still possibly working impulsively to the upside. That still makes us work within the larger bullish narrative. So a break above the 100% Fibonacci level and then acting as support was the key, and that is what we got. So it doesn't mean we're completely out of the woods just yet. It means that the probability to continue the bullish narrative is what matters. We're just working with obstacles and hurdles. Now, there is another important factor that I did want to mention, that I did also mention in my previous video, which was the RSI divergence is being created in the price action. Now, these coming back to resorting to these simple technical analysis does make a very big impact on how you can see these reversals happening. Most importantly, in wave C's, when you have a divergence between waves 3 and 5, that is when you will typically see a strong reversal, and that is why we were expecting a reversal to the upside, then seeing a continuation to the downside. So that's why we got that peak RSI on the wave 3 here, and then also a 4-5. We saw an extreme price movement to the downside, but not necessarily on the oscillation. It actually created a higher low within the oscillation, and that is why we got that divergence on the 4-hour. That was one of the most significant divergences of this whole range in itself, that gave us a really good prediction that it was possibly going to be continuing to the upside. And in fact, it was a 22% bounce. That's very, very big on spot. So if that's the case, what is something else that we can take out of the current information with the RSI? We did hit a very overbought region in this current time of recording. Now, again, just as we saw with RSI hitting peak lows on this wave 3 of the intermediate degree on this wave C, as we are also seeing a possible wave 3 being concluding on peak RSI on this 4-hour time frame. The higher the time frame, the RSI works better. This wave 3 hitting the peak here also gives us a little bit more confidence that this can be labeled as a wave 3. So this is why this main variation is now what I'm kind of currently seeing, where we have concluded the wave 3, because we did also hit that zone, and we hit almost on target for that 1.618, and then we may be working in a wave 4. Don't want to take the time to talk about what kind of patterns we may be working on, but right now, since we did hit a peak RSI on the oscillation, that is giving me a little bit of a signal that this may be a wave 3 in, and we may be working for a possible ABC or WXY. Depends on the complexity of the structure. We could be working in a triangle, we could be completely ranging, working in a flat idea. It all just comes down and boils down to how these corrective structures are going to be playing out with the data given going forward. So if that's the case, we're looking for a wave 4. We don't want to see it retracing beyond the wave 1 termination point, because that would deem it invalid. Again, ideally, we still would want to be around the 50% or the 618 at the very most in terms of the retracement. So if this does turn into a deep retracement, we ideally don't want to be breaking these levels anyways, right? It would be giving us a different signal, which I'll be sharing in just a moment. Again, after that wave 4, we're looking for a wave 5, and that'll create our larger intermediate one too. and then, or wave 1, and then we'd be looking for a wave 2 pullback. And then again, this is just assumed as a zigzag. Anything could be happening as well for this structure. Wave 2s cannot be triangles, just kind of another pointer out. So if that's the case, we're looking for a wave 2 retracement coming back into at least the 618 or the 0.5 or 382. At that point, we won't really know until it happens. And then we're going to look for a possible continuation to the upside for completing that larger fifth wave of the primary degree on the macro. So that's the case. And I did talk about the possibility of us also working on different variation. For now, I do see this as a possible diagonal completion. This is how I had it originally, and I'm still sticking to that idea. But I did also take the time to kind of zoom in, and I was able to count 5 waves into here actually, and I was able to fit in a possible 1-2 here, where we can also have another 1-2, and then we may be working in a possible inner or the more micro degree of a wave of 5-wave move into a wave 3. So we could potentially be still working in a wave 3, and if that's the case, we are looking for this smaller degree of a wave 3-4 to complete. Then we will have that wave 3 complete. Then we'll work for 4 and then 5. Ideally, it doesn't really matter, but it does make the slightest difference in terms of whether this is going to be the bullish continuation, because price is so very sensitive within these regions. Ideally, if we want to continue the bullish narrative, we want the price to continue as high as we can, so we can fit in that bias idea, that this idea of having this as an internal 345, and even just a slightly move above the 70K, that will really give us a little bit more confidence that the bullish narrative is even going to be working more prevalent against that previous idea I just had as that leading diagonal of wave 1-2 going into that 3 that's now just concluding. So we want this 1-2 regardless. We're still looking for a pullback of a larger degree of the intermediate degree, and that is how we're going to look at it. Now the second idea is still a more bearish option because we are still technically possibly working in a corrective structure. I did mention that just because we did break that 1-2-1 structure where we had that partner leg against this wave A, now that we're above this, wave C's can also extend up to the 1.618, even up to the 2.618. But in this case, since we are working within a range, the more ideal spot would be anywhere in between the 1-2-1 or the 1.618, and that wave ABC could now be concluding for a possible wave 4 of a larger diagonal that may be working for another move to the downside in another fashion of a zigzag, meaning that we're going to be looking for 3, 3, 3, 3, 3, and that'll create even a larger diagonal. Now, we did take the time to start looking at what kind of diagonals are in play. There are many types of ways we can count this current structure. I mean, we originally had this as a diagonal going into wave A or 1, and then this was the 2 or B, and then we were looking for a 3, 4, 5 or a wave C concluding here. But in this case, we do have this as the possible ABC conclusion as the narrative. So if that's the case, instead of that, we're now working in a larger possible structure. In fact, I think this would be a lot more fitting on the macro structure if we're going to be working for a larger primary wave 1 to the downside, meaning that if we do zoom out and we're seeing this as an ABC structure to the upside that has concluded the bull market entirely, I think that this would be even fitting better where we have this as the 1, 2, and then working for a 3, 4, 5 to the downside, meaning that if we do complete this diagonal in a last fifth wave as a 3 wave, we'll come back up as a 3-way move, get rejected by another major Fibonacci zone, and then this could this could be creating a better look for a possible 1, 2, 3, 4, 5, or even technically an A, B, C to the downside. But honestly, at this point, I'm not exactly sure how this is going to be playing out personally, but this on the micro time frame, it is starting to give us a little bit more data and how that could fit into the larger time frame of a bearish structure, meaning that this is a 1, 2, 3, 4, 5 into diagonal. This could be a 1, 2, 3, 4, 5. So hopefully that was helpful, ladies and gentlemen. I'm going to kind of keep it short here. If you haven't already, please do make sure to follow me on social media because I do a lot of my important updates on there as well. A lot of updates there sometimes doesn't get translated into YouTube. So if you're not following me on X, at XForceGlobal, please do give me a follow there. If you also want to take a step further into the Elliott Wave Theory and also get more timely updates, please do give me a reach out on Discord. Please do contact me and do not hesitate to contact me actually to inquire about the XForceGlobal Discord membership. We have over 1,000 members in there as well. We've been operating since 2018. So please do give me a reach out as well. And if you guys are interested in another altcoin update, I'm going to be doing a community vote. So please make sure please stay tuned for that as well. Thank you very much. I'll see you guys in the next video. And it is Thursday. So we are not at the weekend yet. I was going to say have a good weekend, but have a good rest of the weekend, ladies and gentlemen. Thank you very much. Bye-bye.